Hi, everyone. Rebecca here. And once again, we come live to give you some topics around the future of work that are relevant for you to consider if you are in transition, if you are searching for your next move, considering different roles in industries. Today, we want to talk about angel investment and how this could potentially be the dream job, the best career shift. And we have Bruno here today. Thank you so much for being here, Bruno. Um, Thanks for your time and for volunteering today to be my victim.
Thank you for having me. My pleasure.
Yeah, so let me just give people a little background on Bruno. Has been initially in his career, he started as an auditor, Arthur Anderson, and then Danone, and then back in 2009, he got into Amazon customer service and then moved into supply chain and has been there for nearly 13 years. So, what caught my attention when I spoke to Bruno was wow, that's a long time to be in such a high pressure, fast paced environment. Amazon has been growing just during that period and still is, but especially during that period when you were there. Scaling must have been like kind of a daily task when you scale that hard, that fast, that hugely. I mean, if you think of all the organizations Amazon owns today, it's close to, I think, 1 million people working under that brand, and that's bigger than the country you're in. So you're based in Luxembourg, here in Switzerland, and I think, I when I think of you, I think of scale and scary scale, brutal growth. And when we spoke, um, I suggested a few avenues that you considered, and I'm really glad you did, in terms of your career. So maybe you want to tell us your journey, your the pitfalls and what worked for you really, and then share this with the audience today.
Sure. Thank you, Rebecca, for the flattering introduction. And yeah, I mean, I think you said it right. I spent a lot of time at Amazon, uh, working on scale, helping at times team scale from scratch to 400 in 4 months, or from 0 to 10,000 in a few years. So there's been a lot of inventing. There's been a lot of innovating, on an operational side, so on customer service, on supply chain, and the common goal has always been how can we grow fast for our customers? How can we focus on the customer experience, make it the best possible? So there's a lot of learning from the, I'd say, the mindset, the tools, the mechanisms that you use when you grow a business that can be applied to smaller businesses also. So that was one of the reasons why I started about a year ago to become more and more interested in that ecosystem, which is absolutely exciting. Really a lot of learning. So we're going to see today that there's, even after many years of corporate experience, you can still learn from great inventors who are literally starting things in their garage, as legend has it for a lot of them.
Yeah. And it's not reserved for certain functions. You can be in supply chain, you could be in marketing, you can be in product development for that. It's okay to be an angel investor or an angel, uh, um, yeah,
Absolutely. I mean,
participating in the community.
yes,
Yeah.
yes. I mean, there's no degree that you need to have. You don't need to certify as a angel professional investor to do this. Of course, we're going to see today that there are some really serious things you need to pay attention to, but it's not like there's a barrier to entry in terms of what school you went to, what professional experience you had.
Yeah.
It really is a matter of giving back. I mean, in my case, it was a lot about this, a lot about giving back to founders, inventors, some of the learnings that I've had in the past 20 years. And I think anything you've done makes you an expert in your area. And inventors, founders will benefit a lot from your experience because you've gone through scaling, you've gone through challenges that they are about to go through, or you're going to learn from them too, but give them another perspective. And what I realized in the past year and a half is that a lot of your experience is valuable to others and can be really big part of your brand.
And you don't necessarily have to be in tech, because sometimes I hear people say, well, yeah, he's from the tech space, so he can mingle with the startup crowd. But you can come from pharma, you can come from the food industry, because now honestly there are a few companies that aren't tech companies in many ways, right? So that's I think a encouraging reality. So
Yeah, no, I think it's a good point you bring up because everything is trying to be tech today. You have ed tech, you have food tech, fintech, everything has tech, right? But you can still innovate a lot in manufacturing, for example. I've been speaking with a few inventors in that area. In that case, I didn't feel like I could really help, so I passed on the investment. But I could see that there was something I just wasn't fully able to understand it, or to really commit to add value on top of investing.
Well, okay. Well, I think you have a few slides to share with us. If you want, I can add them to the stream here. So let
Yes.
me do that for the first one. Let's see how it goes. There you go. So, is it or not the dream job? Let's discover.
Let's find out.
So I'll let you go ahead. Tell us more.
Yeah. So I think first of all, we've been talking since about 7 minutes about angel investing, but I think it's important to define what exactly we mean and where the name comes from actually. So usually, angel investors are wealthy individuals who will provide financial support or financial backing in means of small ticket investments, what we call small tickets, in exchange of equity in startups. And the reason why we call them angels is that this comes from, I think, in the 19th and early 20s, early stage investors who would come seemingly out of nowhere to back theatrical productions that were quite high risk at that time. So they didn't have a lot of backing because of the topics they were about to perform about, or any other reasons that had kind of scared other investors away.
Yeah, and it's helpful to see where they fit in the rounds of funding, because I had no idea. So
Yeah,
good
yeah,
to know.
exactly. So usually you can look at the life of a startup in 6, 7 different stages. The first one being the idea. Someone wakes up one day and says, "I'm going to do the Airbnb of grocery shopping." I'm just
Yeah,
saying something. So,
yeah,
or I'm going to do knee pads for toddlers. So, disclaimer: this second idea didn't work. It was
yeah.
already tried.
That's your MVP, basically. That's where you're
That's
at, right? Okay.
It's even earlier than your MVP. This is an
Okay.
idea, and then at the stage of co-founder, you find one or two people who are willing to go and I guess iterate a little bit on that concept,
Yeah.
and then family and friends will come and support you with a little bit of money also,
Yeah.
and make your and this is where you start coming to the stage of having an MVP, a minimum viable product.
Yeah.
And at that stage, between that stage and what we call seed round, is where usually angel investors will come in. So these are the first people that the founders want to know personally, the first people that they're going to start raising funds towards, and ask for 5K, 10K, 20K, 50K, or even more to help them develop their products further, and yeah, get them take
Yeah.
off the ground really.
So this seed found, yeah, the seed round. Sorry, this is institutional investment or still privately made.
It's
So
still
how?
private. Yeah,
Yeah.
no, it's still private funding. It's going to be your own money, my own money.
Okay.
Then it's really when we come to Series A. I mean, this is not 100% correct, but usually, to simplify really the
Yeah.
discussion here, Series A is really as of when venture capital funds will come, which is
Yeah.
institutional money, where they don't invest their own money, but will invest money of limited partners, family offices,
Hmm.
endowments, universities who will put their money in those funds to be invested in startups. So this is really the pre-VC phase in a way.
Yeah, and then they go round B,
Exactly.
C until
A,
they
B, C.
IPO. Yeah.
Exactly.
Okay.
IPO being the ideal scenario. It could be, unfortunately, for a lot of them, is going to be a failure. But and for some others, they're going to be bought out by other companies.
Yeah.
So yeah, very early stage,
Yeah.
and obviously that means also quite a risky proposition for the angels. We're going to talk about this further also.
Yeah.
Yeah.
And we can even talk about the other side of the coin. Like, if there's anybody here watching us that has an MVP and is ready to be, applying, I guess, for support with angels, like what would be the route? We could also try to. I mean, if you have that available to us, or we can also post about it later on LinkedIn and give them some tips on where
Yeah.
where they go to if they're
Yeah,
ready for.
I think it's a good start to just share what your idea, what your need is with investors. They
Yeah.
might not be the right angel investor for you right now, but a lot of this industry is about networking. Uh,
Yeah.
Getting to meet more experienced angel investors, understanding what their preferred industry functions are to invest in. So
Yeah.
yeah, and we're going to talk about it later, but
Yeah.
I cannot give an exact recipe for it to work,
Yeah.
which people to talk to, but ev- the chances are
They'll come
high
to
that
you.
in your country that there's going to be an angel group that you can contact. Yes.
Yeah. Yeah. Okay. I'll go to the next one.
Yes.
Here you go.
So yeah, as I was saying, so it is a really exciting space. Why? Two reasons mainly, because most of the companies that we interact with are not publicly traded companies. Right, 99% are really small and medium businesses, and so it makes the environment in which you work and in the companies you can invest in really, really large. So 99% of all companies are really small and medium businesses. But out of those 99%, only a few will get actual funding from angel investors. So you will see the investment rate for an angel being at 1 to 20, 1 to 40, which means that for 40 pitches or 20 or 40 pitches that I see, I will decide to invest.
Hmm.
That's probably the rate I'm in right now. I think it's quite similar to other angel investors.
Yeah.
And but the money invested in small and medium businesses has been growing quite a lot. I have some numbers here from 2018, and those numbers have been growing quite steadily since then. And we
Yeah.
mentioned the risk aspect of it. So it is a really risky business, and it's a long-term business also,
Mm.
because of the time that is needed to build a company, build a culture, build product market fit, making sure that the clients that you have will stick with your products and that you really create and add value. This will take time. This takes usually 8 to 10 years. So, which is the time at which you start seeing the returns on your investments. And also, likewise, it takes a long time to fail. So you
Mm.
could have put some money today, and everything looks great, and then a couple of mistakes. Even the
Yeah.
biggest publicly traded companies have done horrendous mistakes. Things can happen, and then only in year 6, on average, you see that the deal that you've made is actually failing. Um,
Mm.
But overall, as an asset class, because you really should see it as an asset class, such as real estate, debt, public equity,
Yeah.
it is really high return, because
Yeah.
usually high risk goes hand in hand with high return.
Yeah.
So 25% annual return in average.
That's not bad.
Yeah. But again,
And
it's only
you have
4%
to
of
balance
those
out
deals.
the risk
Yeah.
with the varied portfolio, right? Yeah, we'll talk about that, I suppose.
Yes, absolutely. So vary your portfolio. I'm not sitting here saying everybody should invest all of their savings in non-publicly traded companies. That would be really high risk. But balancing out in terms of your angel investments, and also angel investments towards real estate, publicly traded companies, and other instruments such as ETFs is highly recommended. So.
And people don't do that enough, Bruno. Like you hear people saying, like even in my family, like my parents are like, "Why don't you just buy a place like your brother?" No, I rather invest in my startup. They're like, this is so elusive and so ethereal, so outside of our understanding. And are you sure you're doing the right thing with your money? So it's not yet a common thing, right? And we can talk about that as well. And
Yeah, it's not a common thing, and I think the answer to the question, "Are you sure what you're doing with your money?" The answer is no. That's the thing,
yeah,
because 65%, I think, of the deals you make will be failures.
yeah,
You will end up losing money with it. Then another 25% will be just as will return you your initial investment, and the last 4 or 5 or 10%, whatever the number is going to be 30x, 50x, and get you to that 25% return. So no, the question is, do we know which startup are going to be successful when we invest? No, we don't. We see signs, and we think it's fun to work with founders, inventors, and support them along the way. But there's no guarantee. No.
yeah. Okay, well let's look further. I'm very curious. Tell us more about the mechanics.
Yeah. So once you think that despite the risk, you want to start investing your own money in startups, there's a few things obviously that you have to pay attention to. The first one, and I cannot stress it enough, is speak to your lawyer. If in any case in your region you are protected enough to do this. There are some rules in the US. All of this is regulated by the SEC, so you need to have at least an income of $200,000 per year, or $300,000 if you file jointly, and a net worth of over 1 million. It's different in the UK. Income of 100,000 pounds, and net assets of 250,000 pounds. But for other regions, countries, it might be really different. So to check if you're in what we call an accredited investor, which are really ways to protect yourself against financial risk, against moral hazard, which is an entrepreneur taking your money and then and flying to bar with it, throwing party in Vegas. I mean, that has happened, right? So this is a risk. But with all the cases that I've seen, angel investors that I've seen, this has never happened. I know it has happened, but not in my immediate circle. So first of all, make sure that you are legally and financially allowed to invest. Then very practically, I think you should think of how much do you want to invest per year. Like any other financial plans that you make, you should really try and make a plan, try to stick to it as much as possible, and because it can become quite tempting to see all those great ideas and to say, okay, let's invest a little bit more, but that would put you obviously in a really precarious situation. Then practically join an angel group. Locally, this is the case in Luxembourg, for example. use LinkedIn. Obviously, Rebecca, you would know everything about it, but LinkedIn search, LinkedIn networking is great to find fellow angel investors, and I find this community to be a quite tight knit one.
Mhm.
I've had a lot of lunches and coffees with people that I didn't know at all. The only
Yeah.
thing we had in common was that we wanted to start creating our own deal flow. So
Yeah.
if you hear about great companies to invest in, let me know.
Yeah.
How did you? What did you pay attention to? Did you see a lawyer? Like how much did it cost you? All the things. I mean, this is really helpful to speak with people who are sharing your interests and maybe are going through the same challenges that you're going through. So you're not alone, is what I'm trying to say.
Yeah. So it's not so regulated. You have like secret lounge clubs, cigar bars. I don't know. Where do you find them? On LinkedIn mostly, or is there any association membership that you could think of? But maybe you're going to mention that, so I don't want to get ahead of the presentation.
Yeah, no, I mean, we can talk about it now also, but for example, in Luxembourg, there's the Luxembourg Business Angel Network that you
Hmm.
can join for a couple of €100 a year, and you will have access to pitches, monthly pitches from startups, and obviously you start working and then meeting a network of angel investors who will have their own deal flow also, and you can create relationships that way. So that's one way. LinkedIn is another one. Just do a search angel in as a keyword, and you will see a lot of people in your region that you can contact. Like I said, I've never had, or maybe once or twice, but mostly people that you're reaching out to and asking them about their experience investing in startups are going to be really willing to share their experience and to help you out with any advice that you would need.
Yeah, and I think there are dedicated firms also making those connections. I think there are a few here in Switzerland. I think Sanborn would be one, but yeah, and incubators, accelerators, mentorship programs. I suppose they also have this uh, um, available to their members and fellows and followers. Yeah, I would
Yes,
probably
so
imagine.
you startup accelerators, incubators, and some other VCs who are more operational will also welcome people with experience. So in that case, it will be less about money that you want to invest in because they're already at a later stage. Those companies, but it's more about advice that they think that you can give to their portfolio companies. So this is actually how I started it. So that we can talk about.
Yeah. Okay.
Yeah,
Super. Let's
yeah.
see what we have next. How I started. Oh, there you go. Perfect.
Yeah, that's yeah, exactly. Great segue. Um, so yeah, the way I started it was that I met the founder of a VC who was looking for experts, corporate professionals to help with advice to their portfolio companies. So they have more than 100 companies. He gave me just a pitch and then a list of all those companies, what they were working on. And with my experience, he thought there are a few that I think you can help and with your advice in terms of scaling and in customer experience, in supply chain, etc.
Yeah.
So I started to give some advice to those companies in that fund, and that kind of like piqued my interest. Well, first of all, I didn't think that that was a good idea. I didn't think that I had anything that was valuable to share with people who are creating an entire business from scratch. So I was a little bit hesitant at some point, but then after a few months, I thought, why not? Let's see if I can be of any value to those people. So I started advising a few. I found that some of the knowledge that I had in terms of industry standards, in terms of benchmark, in terms of what good looks like for some of their operations was really valued. And even if you don't have the experience yourself, but you know someone who might, this is already quite valuable to a founder. So I started making introductions. I started advising them on some of the pitfalls that I think they could they would have to go through, or they shouldn't go through, and that made me a little bit more, let's say, open to the idea of collaborating more closely with startups. Then you and I, we talked. You told me, "Hey, this is fantastic. You should try and make a business out of this, and why not invest?" So I gave it some thoughts, and I put together a little bit of a plan. How much do I want to invest? I started to train myself. I went to Wharton, did 1 week of venture capital executive MBA, which is not exactly as we said. It's the phase that comes after angel investing, but a lot of the logic are the same in terms of
Yeah.
identifying a great business model, the return logic. So all of this is really valuable. So I went to Wharton in their VC program, and and I read a lot of books, made sure I understood what I was getting myself into.
Yeah.
And like I was saying earlier, speaking with people who have been doing this for many years, made me feel more comfortable about doing my first investment, which I did then. But it was probably about an 8-month journey between the day where I thought I realized this was even possible, and the day where I started to do it. In the meantime, I also listened to a lot of pitches, and tried to test my business understanding of what makes potentially a great business.
And when you started your career, did you picture this for the second half of your journey? Or how
Um,
did you really, I mean, I know we talked, and in the beginning, I think you were like skeptical about what? Me? So I really, I'm so glad that you actually took the jump, because, and not only did you take the jump, you put your money where your mouth is in many ways, and it can be scary. So what advice would you give to people who are like, nah, that's not for me? How do you, yeah.
Well, I don't necessarily want to convince people who are saying it's not for them, right? I mean, it's because, like I said, it's you put there's a little bit of risk involved.
Yeah.
It's not like betting, because it's because you work alongside those founders also to make this work. But in a
Yeah.
way, you invest in something that is uncertain. But the
Yeah.
ride, I think the journey is absolutely absolutely great, and that's what I would tell people who are still hesitating. The first one is, don't think that you don't have value add to bring to those founders.
Yeah.
That's the first one. I think it's you absolutely your experience is absolutely valuable to a startup that is on that growth journey. The second point is, you can do this, and we're going to talk about this also, but I think the second point is, you can do this with any type of intensity that you want. You don't have to invest $200,000 that you don't have every year in this. It's your own pace. And then the third one is probably, it's the closest there is to be an entrepreneur without being one. So
Yeah.
I've read in one book that it's a bit like being a grandparent.
Yeah.
You enjoy the time with the kids, but you don't have the stress of and the responsibility of
Yeah.
educating them.
Yeah.
It's a bit the way it feels. I mean, you live through a proxy the excitement of getting a new customer, of releasing a new version of your product, of reaching a certain sales milestone without having had the sleepless nights that led to it. So
And also, does it unlock doors? Maybe you want to tell us now or later, for like board membership, mentorship roles, and being part of maybe private equities and funds that you wouldn't otherwise, have transit with, have the familiarity, to be familiar with those players in the market, because otherwise, if you're just in your 9 to 5, you're in that rigid structure, you probably don't get to meet those people.
yeah, no, yeah, I think you're absolutely right. I mean, in terms of being a board member, yes, that can happen. So there's a difference between being a board member in terms of being a part of the board of directors and being an advisory board member. Usually, as an angel investor, you won't stay a board member for long if you've ever been one, because usually VCs are going to put one of their team members as board members, and you end up being a very small fish in a big pond. But you can still be part of the advisory board, and help them with industry knowledge, client introductions, company culture, mechanisms to put in place for their startup to become successful. So that happens quite a bit. Yes, you can. If you start doing this on a regular basis, you will, I think, organically, you might realize that your services can be of great benefit to other companies. As an interim leader, for example, I've met people who've been doing angel investment and at the same time were C-level leaders in companies for a few years before or a few months even before joining their next gig. So it makes you, and maybe we're coming back to the initial point of the future of work, and we're seeing a lot of, even at the a more senior level, we're seeing the gig economy taking off as well. And yes, private being also on the list of private equity firms that could help, or that could use the help of a leader who's been going through different growth phases for really small companies or more established companies, is it comes also. It does come with the deal, so to speak. But a lot of the time, it will happen if you start doing that networking, right? If you invest 5, 10, 15K in one company, and then you wait for the company to exit and give you a return, and you never talk to the founder, because that happens also, then your career is not going to evolve in that direction that we just mentioned.
Makes sense. Yeah, of course. Okay, let's see what's next. The bigger picture. Tell us about that.
Yeah, I think it's a little bit of a way to answer the question that you had. Well, why me? I'm not sure, etc. Well, I think the first one is, why not? If it's a question of money, then as we discussed also a few times, consider it as an asset class, right? I mean, if you've been able to buy an apartment or a house that you rented out, for example, or that you're planning to do it, then why not also invest that money in a startup? Even if it's 250K, you don't have to do this in one go. You can do it over 3-5 years in different companies. And at the end of the day, it is most likely going to be a better return than real estate. It doesn't have to be 250K that you have to take a mortgage or take debts from a bank to invest in a company today. But it can be in small chunks of money, and build yourself a good portfolio. And as we were saying, I mean, your experience, your expertise is super valuable to early stage founders. We alluded to it, but it's really fun because if you're curious and you love to analyze business models, which is my case, I love to understand what is your supply, what is your demand, how do you view this, how do you disrupt business models that exist today, what is your profit formula, your growth formula, how do you make sure that the customers that you gained last month are still going to be active and continue to buy, all those questions, and that very analytical work that I think I've been also trained a lot at Amazon, right? Is very enjoyable, and you do that a lot with the founders, and they welcome just another way to think and to challenge them about what they thought was right for the business. So you really work closely with entrepreneurs. Like I was saying before, it's being the uncle. You have fun, and then it's for the parents to worry about all the bad things that you taught them.
Does it also pave the way for you to sort of learn from people's mistake around you in case you ever want to start your own business, so you're more prepared to do that, and you're informed about the risks, and it's kind of a startup school in a way?
Absolutely, yes. I think you it's a good transition from corporate to
Yeah,
being an entrepreneur yourself. So it's not the usual path, or it's not the path that yeah, it's not the usual path. I think like a lot of angels are entrepreneurs themselves, have been entrepreneurs. So I think it's more the
okay,
other way around, that
yeah.
they've experienced with all of the stress and the challenges and the sweating and
Yeah,
years, and then they're in a good position to help other founders. Um, but yes, it is. I think it is a good way to transition out of one world to go to another one.
yeah.
Definitely.
Okay,
Yeah.
super.
And
Well,
yes, and
oh yeah,
yeah,
tell me.
yeah, and you can really be flexible about it, right? So we talked a lot about investing money, but also being an advisor is possible. And in terms of how much you invest, it doesn't have to be big amounts right away. Even though founders will oftentimes tell you we're raising, let's say, 1 million,
Yeah,
minimum ticket is 50K, and then you have a discussion with them. And a lot of time what happened to me was that people were telling me, look, we said 50K, but we're willing, if you want to invest less, we understand. We think
yeah,
your expertise can be really helpful. So the investment and the support that you're providing is not just financial. It's
yeah.
also it's also sometimes even psychological, right? And
Yeah,
yeah, I've had discussions sometimes with founders where it was more like pep talk and things like that, right? So
yeah.
yeah, so yeah, no, it's
I don't know if you're
I think
gonna
it's
touch.
being a mentor a lot.
Yeah, for sure. And this, I don't know if you're going to touch upon this, but I was thinking, wouldn't it be great if alumni became angel investors and then came back to where, the alma mater, to give back and push these people to be, to take some calculated risks with the ideas that they might have. So I know you come out of INSEAD, and maybe that played a role or not, but wouldn't it be great if we had that structure in place for alumni and for the students
I think it would
in
be great. I think the structures are in place. So two things. Yes. So the early fund that I started working with as an advisor is an INSEAD fund. So that was
yeah,
within
there you go.
that
Yeah,
network. Yeah. And the
yeah,
logic of it is really to invest in funds that are, or to invest in startups that are managed or led by founders from
yeah,
INSEAD.
yeah,
So you really have that give back mentality that is at play here. And yes, some of the angels that I've met also were at the same time really active leaders in startup accelerators
yeah,
with their school.
yeah,
So it's I think there's and this it's also the way startup accelerators work, being very local, working locally with graduates from schools, and then partnering with corporations or corporate VCs. So there's something about the it is a big business, but it's really small in terms of scale and execution, because you need to have a network of local investors, startup founders, that are really tight knit, and work together, benefiting from each other's help. So I think it does exist, but it's probably not as it's not as developed as it could be. But I know some of the
yeah,
accelerators are working on structuring this
yeah.
as we speak. Yeah.
Awesome. Yeah, that would be an interesting thing to watch and hear. So tell us, because of course my my question is, how do you know who to back? And I
Yeah.
guess this is where you're coming to teach us a little bit about your strategy.
Yeah, I'm not sure I'm going to teach anything, because, like I said, I think you never know until,
Yeah,
like, I tell you in 10 years, how it turned
yeah,
out. But yeah, no, I do have some criteria that I'm willing to share. I think the first one you can see here, and so there's a non-exhaustive list of some companies that I'm working with or invested in. So the first one is, can I add value? because I don't see myself as a passive investor. I see myself
Yeah.
as someone who can help with, like I said, sharing introductions to potential clients, partners, and in general leadership experience. The second is absolutely the experience and character of the founder.
Mm.
You want to see someone who either has already started some businesses, failed or succeeded, but at least learned a lot from it, and also is willing to be really flexible, because in those early stages, it's like running an experiment. You make an assumption about what customers want, to develop a service, you test it, it doesn't work, okay, you do something else, and you iterate on this a lot. So that intellectual flexibility, that willingness to understand that it's not going to be the first try that is going to be successful, I think this is absolutely necessary. I think the third one is that, and that goes a little bit towards investing in an area that you understand. So for me, the business improvement needs to be, or the business model needs to be clear. And for it to be clear to me, it needs to be something I understand. I wouldn't be able to invest in fintech
Yeah.
or
Other.
any other area that I haven't been active myself into. So once I understand it, and I think it makes sense, and that I think um, it is there's some finances, or the financial plans look like they make sense, then I'm willing to start looking at it. Can it disrupt the industry? Most of the ones that I'm looking at today, in one way or the other, have that. Um, let's say, maybe, yeah, a little bit like that Airbnb factor,
Yeah.
where or IKEA. So doing something that was done completely differently before and making this mainstream. So some of them
Yeah.
have that, most of them. And another thing that is really important is, do they have customers, or at least customers interested? So it's quite early. Sometimes they
Yeah.
just have a prototype, but lately, one that I was talking to was telling me about some of the customers that were already on board and had signed letters of intent after understanding what they were going to bring to them, but they need money to start building actually
Yeah.
their product, right? So and then there's two more. So FOMO, fear of missing out. That I think I'm guilty of this too. When you see other investors saying, "Well, yeah, I'm going to invest in this one," then
Peer
you want
pressure.
to, yeah, it's a little bit like peer pressure. I mean,
Yeah.
it's not the best reason to invest, but I want to be transparent that this happens, and you might not completely escape it.
Yeah.
And then, yeah, there's a little bit that X factor, the craziness of the ideas. That's something that is so crazy that it might work. So there's one like this.
Is there something about, sell the book and then write the book? And when it comes to, if you're too proud of your first product launch, then maybe you waited too long. Do you also factor that in terms of, um, yeah, maybe it's not necessarily what the customer is looking for, but it's a beautiful product and it has all the features. Although, do we know if the market is open to it, or how do you figure that out, or how do you factor that in? I'm not even sure. Um,
Yeah, no, I think you're right asking the question, because it's really about product market fit. Um, and a mistake that a lot of founders do is to fall in love with their product,
yes.
and yeah, and not really realize that there might not be any market for it.
Yeah.
So I think it's you need to first make sure that the market is there. I love to
Market
take the
readiness.
example.
Yeah. Oh, yeah. The market even exists, right? Yeah.
Yeah, the
Okay.
market exists. Yeah.
Yeah.
So I love to take the example of Dropbox, for example.
Yeah.
So Dropbox, they sent a brief, a video of their product to potential customers, but they didn't build anything before customers said, "Yes, we want this." The video that they put out was it was a demo of the product, but they hadn't built it. It was just a fake. It was just a video
The
of,
prototype. Yeah.
yeah,
Exactly.
a
Yeah.
prototype of them moving files into a central folder, and then customers could see the benefit immediately, and then they started building it. So
Yeah.
I think that's extreme example, and it worked out well, but that's an extreme example of you don't have to spend cycles and then years in building a product, and then you realize that customers actually wanted something different. So
Yeah.
you want to find that right balance between iterating or building something, but not to the extent that you lost 6 months, 12 months, which is an eternity
Yeah.
in the startup world,
Yeah.
because the customers do not want this.
Yeah.
So yeah, no, I when I invest and I look at founders who are, like I said, who are willing to pivot, and who will be flexible to understand that maybe their initial idea was not the best one.
That hard. Yeah.
Yeah,
It's
yeah,
hard though. Yeah.
yeah. And there's success stories like this. I mean, we can share maybe afterwards, but I think even Twitter, I can't remember exactly, but Twitter was not Twitter at all in the beginning. It was it was something completely
Something
different.
else. Yeah. Yeah.
And but people were willing to. Well, there was a lot of. I think it would make for a great movie. I mean, the stories in the beginning were crazy, a little bit like
I
what
think
we
Slack was
spoke about
like that as
Facebook.
well.
It's
It
like,
wasn't supposed
yeah,
to be, it was just like a byproduct of what they actually wanted to sell. Yeah.
exactly. Yes. Yeah. So yeah, no, you want to you want to, and that's why I think we talk a lot about the horse or the jockey. So do you want to, and do you invest more on the horse, which is the product, or the jockey, which is the
Founder.
founder? Yeah, it's going to be the founder for me anytime.
Okay.
So, and I think for most people, because that founder, that jockey is going to realize where maybe that they're not on the right horse, but you still, but the horse is just going to do
Yeah.
what they do, right?
It's just a means to an end in a way.
Yes.
Yeah.
Yes. Yeah.
Awesome. Yeah, that's very helpful. It frames and confirms a few suspicions I had.
Yeah. Yeah.
Yeah. Okay, well, let's go to the next slide. So,
I think it's more of a conclusion about all the things that we've been talking about. I think it's there's really good sides about being an angel investor. I think we talked a lot about giving back. I think it's very true, and understanding and having a front row seat to what it takes to build a business, and doing that with the founders. I think this is great. Um, it's all about networking. You will meet people. I mean, I'm getting messages on LinkedIn on a regular basis from either people who are also in the investment space or founders. And then a lot of the times just to talk and just to understand what value can you bring, what
yeah,
is it that you do, et cetera, et cetera. And I think it's great. It's different when you have your 9 to 5 and
yeah,
you're building great things, like I've been doing for a long time at Amazon. But you don't get to nurture your network as much.
yeah,
You execute perfectly on great things, but you when you do angel investment, you get to open your eyes to a lot of other possibilities.
yeah, yeah,
And
yeah,
the added bonus is, yeah, it might become a stream of revenue for you at some point,
yeah,
much later. And I've heard from also kind of a mentor in that space who told me a few times that angel investment is not to pay your rent, but it's more to
no,
pay your retirement. So
yeah. That's a good one. Yeah,
yeah,
definitely. It's
yeah,
okay. Interesting. It's well, again, a lot of people didn't plan for this sort of career ending or career twist towards the second half of their journey, but it's something that is becoming more and more of a trend, and I think it's well, it could be just as safe as investing in real estate. Maybe not, but yeah,
I think you're right. I think we can maybe say it in a little bit more like in a provocative way, but yeah, I mean, it's like investing in almost like investing in real estate. I mean, there's also a risk in real
yeah,
estate, especially now. Will prices crash at some point? You can think of everything like dealing with tenants that are
yeah,
not the best. I mean, all the things. So why not? And especially when you can put some of your own value, your expertise, your experience. I think it's for me. It's less about. I don't think as much as about the financial returns as I think of just having a great experience, sharing some knowledge and learning along the way also from the founders.
Awesome. Let me see what's next. Oh yeah, so tell us about that.
Yeah, no, I think we've talked about most of them, but you start very early. So you might be a big shot in the beginning for them, but then when VC money comes in, Series A, B, C, D, until IPO, you end up being a very small fish in a big pond, right? And the way the equity is structured is also that you might, in some cases, you might not even protect it. Your investment might not even get protected in the sense of the last one to come, which will have probably put the most money, will get served first on the return. So you might end up, with nothing or not a lot, but still, as a rule, as we saw in the beginning, it will be a lot more that what you put in. But yeah, it's still risk. It's something that you have to be aware of, and then also you kind of lose the relationship with the founder at some point because they're busy preparing investor reports, preparing to their much bigger investors and then dealing with them, and they won't have as much time to deal with you. So you take more risks because you're so early. At first, it's just an idea. It's an MVP, and if you want to have full on round and not be too diluted, or to still have an invested interest in the company, if you started investing 10, 15, or 20K today, then maybe you want to think of full investment in the next rounds. So then in a year or two, invest again 20, 25K, or less. So at some point, you need to ask yourself, okay, I probably need to have deep pockets, and then maybe having a 9 to 5 and
on the
side is actually quite a pretty good idea.
Or going to a VC fund and investing with other people's money could also be an option.
Exactly. Yeah, it's something that we haven't talked about. You don't necessarily have to invest directly in startups. You can be investing in funds yourself, so become a limited partner. I know some people who've done that. So it's another way where you're a little bit more distant to the action because you invest in a fund that invests themselves in companies, so you don't get to interact as much with the founders. So yeah, I mean, some geographies, as we saw in the beginning, have a high hurdle to get in. So having net worth of 1 million in the US is not everyone, obviously, and it takes time. So you need a lot of patience. So at the end of the day, it's all about your how much risk do you want to take, do you want to, if you want to take low. Don't want to take too much risk, then you will do 1, 2, 3 investments. But your returns might be also really low. High risk, high return, low risk, low return.
Awesome. And okay, so I think there's one more slide.
Yeah. I think we need
to, tell us.
No, I think we need to answer the question, right? It was not just clickbait. So is it the dream job? I think in terms of networking, absolutely. It's a 10 out of 10. You get to meet so many different people on the startup side, on the networking, on the investment side, that I think it's great. In terms of learning, absolutely, also Max, great here because I've learned about deep tech, have learned about supply chain, I've learned about retail, even more than I have in my years at Amazon, right? So it's you learn a lot more by deconstructing and building again business models with founders. Flexibility, yes, it's great. This is something we're all looking for, also in our occupations today. So flexibility, yes, because you decide which pace you want to invest in. It's and then how much you want to be involved, and then finally, in terms of returns, I mean, if you do everything, at first I had a question mark here. Yeah, so you can have high returns, but you can also have nothing, but still have had the benefits of the first 3: networking, learning, flexibility. So I'm not recommending everyone to to be completely financially detached and tell people, yeah, it's fine if you lose all of your money. That's not what I'm saying. But it's still quite beneficial if you can
You
have
can
an
wait for it.
yes, yeah.
Yeah.
But so it is.
Well, and the
Let's say that you
advantage
will
is,
have a 10 out of 10 return if you're patient enough,
yeah,
if you're taking your time to do deals that you believe in with your criteria, and if you're involved, if you manage to involve yourself as much as possible.
well, and it's also something you can start right now in parallel with whatever else you're doing. So you don't have to wait for any MBA certification. You get accredited in your area, and sometimes the criteria are rather simple and straightforward, right? So that's
Yes.
that's also what I learned today. Yeah.
Yes, absolutely. Oh, yes. I would definitely say try and see if you can budget a couple of thousands on the side, and see there's some funds also who let you invest as low as a thousand
Yeah.
euros or even less.
Oh,
I mean, it's
sure.
possible. You need to find them, but
Yeah.
they're out there. So you can do it at a very small scale just to get your feet wet,
Yeah.
and see if you like it. That's possible. And if at some point you're crazy enough to say, I want to do this full time, then uh,
And you
that's
can
be my
invest
guess.
in a specific region. Like, I mean, I know a fund for, startups in Israel, a fund that is specialized in sustainability type, green type startups. One is Champel Capital, actually. Yova has this. There are a few of those. And it's, yeah, it could be as low as, I don't know, 5,000, right? And
Yeah,
that's not absurd. Yeah.
yeah, absolutely. Yeah. So yeah, no, I think the question is still open. I mean, I didn't want to fully answer it. Just wanted to be a little bit
Yeah.
proactive with this slide.
I
But yeah,
love the
I think
criteria you picked. Yeah.
yeah. Well, it's very personal. I think
Yeah.
for everyone, it's going to be different. But that's
Yeah.
that's the whole point of this talk, also to show that it is what you decided it will be, right? In terms of
Yeah.
pace, in terms of intensity, in terms of fun. So
But location is not a factor here because it can be done remotely completely, pretty much.
yes, yeah,
Yeah.
yeah,
Yeah.
absolutely, yeah.
So you could be based wherever and you could be investing somewhere completely different from your
Oh yeah, yeah.
geographical. Okay.
Yeah, I'm based in Luxembourg, and then the different startups I came across and or invested in are based in the UK,
Yeah.
Switzerland,
Yeah.
US,
Yeah.
uh, Turkey. I mean, it's yeah.
Yeah.
It's
Awesome.
I don't necessarily recommend this. I'm just sharing how I've done it. I know some other people have been much more local. In general, in the U.S., they will be very focused about investing in Colorado or even in
Yeah.
one specific city, for example, because the ecosystem is also very different there. So they would be completely ignorant about possibilities in Europe,
Yeah.
for example. So yeah,
Yeah.
but yeah, I mean, in theory, provided you cross all
Yeah.
the dots and you cross all the T's and put all the I's on the dots, as we mentioned, you could potentially invest anywhere.
Yeah.
Yeah,
Awesome. Oh my God, this
yeah.
was so helpful. And I've learned tons, honestly. I'm thinking I should start also, risking a bit with my money because, well, all of it is pretty much invested in my own idea and MVP and startup. But why not join forces with a more strategic view, bird's eye view, where you have this long term thinking, and it's also probably encouraging you to be to mitigate risk in creative ways. Thank you
Yeah.
so much. This
You're
was
welcome.
great, and I think well, in terms of questions right now, I don't have anything from. I think I asked all the questions that came and that I could think of, and but you will probably be reached out by people coming your way with um, yeah, further questions. So thank
Really
you.
happy to answer. Yeah.
Thank you for your time, and thanks to the audience for being with us today. We'll see you guys in 2 weeks from now with a different topic to discuss. Bruno, really fantastic. Just thank you 100 times. And that's it. I'll
Thanks
end
a
it
lot.
today here. It's been an hour, and it's gone so fast. Yeah,
I agree. No, it was a great opportunity for me to share. I hope it was a value to the audience, and I'm glad that
yeah,
that inspired you at least.
yeah. Thank you again for your time, Bruno, and I'll see you around.
Yeah, thank you.
Bye bye.